If you think 5-minute scalping is about finding the perfect indicator, that is exactly why most scalpers lose. The real problem is not the setup. It is that most traders scalp at the wrong time, in the wrong conditions, with no rule for when to stop. So in this video, I am going to show you my best 5-minute scalping framework. Not because it is magic, but because it is simple, repeatable, and built around one idea: trade liquidity, not noise. Here is what usually happens. A trader sees one fast candle, jumps in late, ignores the spread, puts the stop in a random place, and then takes 3 more revenge trades when the first one fails. That is not scalping. That is compressed gambling. On the 5-minute chart, small mistakes get punished fast. If you trade during dead sessions, if you enter without momentum confirmation, or if you keep trading after conditions change, your edge disappears before you even realize it. My framework has 4 filters. First, I only want high liquidity hours. That means the London and New York activity windows, especially when volume is strong and spreads are tight. Second, I want clear short-term direction. If price is above the short-term moving average and holding above the session value area, I am only looking for longs. If the structure is weak and price is below those areas, I am only looking for shorts. Third, I want a pullback, not a chase. I wait for price to come back into the trend. Then I want to see a clean confirmation candle that shows momentum is resuming. Fourth, I define the risk before the trade is live. If the setup does not give me a clean invalidation level, I skip it. Here is the long setup. Price is trending above the short-term average. It stays above VWAP or the session mean. Then price pulls back into the trend instead of exploding away from it. Now I wait. I want the pullback to stall. I want sellers to fail to push lower. Then I want a strong candle back in trend direction. That is the entry. My stop goes below the recent swing low or below the structure that proves the idea is wrong. My target is not some fantasy 10-to-1 trade. On the 5-minute chart, consistency matters more than ego. I am usually thinking in clean, realistic extensions with disciplined reward to risk. This works because it solves the real 5-minute problem. It forces you to stop chasing. It forces you to trade when execution is cleaner. And it forces you to define the trade before emotion takes over. Most traders do the opposite. They trade dead zones, low volume, wide spreads, and random breakouts with no proof of continuation. Then they blame psychology. But a lot of so-called psychology problems are actually process problems. Here are the rules that matter more than the indicators. I do not trade around major news. I stop after a defined number of losses. I do not widen stops. I do not take low-volume fake breakouts. And if price is chopping around with no clean direction, I do nothing. Because the goal is not to find a setup that looks amazing for 5 screenshots. The goal is to find a setup that survives real conditions. That is the difference between random trading and validated trading. If you are serious about scalping, day trading, or building expert advisors, you have to think beyond the entry. You need to know whether the logic holds up across different sessions, spreads, and market conditions. So if you want my best 5-minute scalping strategy in one sentence, it is this: trade high liquidity, align with short-term structure, enter the pullback confirmation, and cut the trade the second the idea is invalidated. That is how you stop guessing and start trading like your capital actually matters.